Hey, everybody. Welcome to This Week in Pre-IPO Stocks podcast with me. I got Clint Sorensen, Chief Investment Officer at WellShield, an outsourced CIO and investment research company, and Nick Fusco, CEO of PM Insights, a pre-IPO stock secondary market pricing company. Evan is on a plane today, right now. All right, fellas. So two things I wanted to talk about with you, and then we'll kind of open it up for that third topic if you guys want to hit on anything. But Shein. So Trump just signed into law some tariffs, one of those being for China specifically. So Shein is a Chinese company. It's actually interesting if they're going to get roped into this or not, right? Because I think technically Shein's headquartered in Singapore. Nick, do you know?
Yeah, we've always bounced around that. So is it Chinese? Is it not? Clearly, the operations are mainland, but there is a Singaporean connection for the corporate.
Right.
Yeah. So
it
I'm
seems
pretty sure he's targeting firms like this. It's a big export styled company, but it's a multinational as well. But let's just assume this sort of entity is going to be that target.
Yeah, I mean, the stuff that I'm reading in the press is that Shein's going to be impacted by these tariffs, right? So obviously, maybe their factories are in mainland China and they're shipping from China to the U.S., so that qualifies for the tariff. But at any rate, Shein has a $64 billion IPO coming. They're going to list in London. They have a $50 billion valuation, so that's a very low revenue multiple. It's just over 1x, right? And 28%, Clint, we were talking about that earlier, 28% of the revenue is from the U.S. So like this, I got to tell you, in pre-IPO stock land, I can't think of another company. I mean, ByteDance, I guess, right? Maybe. But Shein and ByteDance are really like the two companies that I'm aware of in this space that would be impacted by the tariffs. But I just wanted to hit on this real quick. If we think that, what's the impact of these tariffs on pre-IPO stocks?
Well, I think you're also going to have some positive impacts of all the competitors to those companies that would be impacted that are just not pre-IPO, right? So if we're going to take any sort of import from another Asia Pac country, European country, African nation, which there are really none in our universe at least. Maybe there's a good benefit there,
right,
for import purposes.
Right.
But yeah, on the negative side, I think it's really ByteDance and Shein.
Right. Okay, got it. So Clint, all in all, it seems like these tariffs are kind of, the pre-IPO stocks are kind of avoiding direct impact from the tariffs, right? But what are your thoughts, perhaps, on just more of a macroeconomic perspective on these tariffs on technology? Because these are most of the companies we deal with in this asset class are technology companies, right? What are your thoughts there?
Yeah, I mean, when you think about tariffs, I think we've talked about this before. My opinion on tariffs is very different from what I would consider as the standard opinion on tariffs. I do not consider them inflationary in this instance, right? Long term, they could be. But short term, as a method of trade negotiation, they're typically demand destructive. So all in all, they're very negative for growth. So from a macro perspective, they are a net negative for demand, and they're also a net negative for inflation. So that's problematic, right? Because just now we're finally getting leading indicators like ISM new orders, for instance, picking up, small business optimism picking up. We've been negative on a rate of change basis. If you look at conference board leading indicators since 22 during the Fed tightening cycle, we're just now starting to see the beginnings of an acceleration in the first quarter of this year, and that could potentially run into a significant headwind in the form of the tariffs. Also, a significant headwind due to treasury refinancing. So from a macroeconomic perspective, this is a net negative on liquidity. It's net positive for the dollar, which is also net negative on liquidity, creates a dollar shortage. And it is just downright negative for global growth. So I think that's the best way you can look at it. On the flip side, you want to look at what the positives out of that is when you get a net negative for growth, net negative for inflation, you get negative economic surprises, which typically respond to stronger dollar, stronger rates, these type of policies, slower growth. That deflationary force creates more impetus for the Fed to ease. So I think the market might not be pricing in an adequate amount of Fed rate cuts Right now, market's pricing in 1. I think if you get these negative economic surprises and slowdown in growth, you're going to end up getting probably 4 to 5 rate cuts, which sounds aggressive, but not if you look at the relationship between the dollar, interest rates, and economic surprises. You should get more rate cuts. And those more rate cuts are what were needed to kind of loosen up the liquidity from the traditional private sector that's been held up by the public sector. Think about it last year. Government spending grew 20% year over year in the last 2 months of the fiscal year, or I'm sorry, first 2 months of the fiscal year. Last year, year over year growth in deficits were up 64%. We're running 6 to 7% deficits as a relationship to GDP. This is insane. And all of this is what's been keeping up at least the headline coincident growth numbers, because GDP or government spending as a percentage of GDP has been about double what it historically has been. And so you start to get a growth slowdown, you can finally get this alignment between fiscal and monetary policy again. And I think that is what we need to start to spur credit growth in the private sector. So sorry for the long-winded answer, but that's how I see tariffs currently.
I got you. So keep an eye on the Fed, right? And if that could be kind of a shining
economic
light.
surprises. Look at Citigroup Economic Surprise Index. That's one I'd be tracking here. And watch the dollar. The more the dollar moves up, the more those economic surprises move to the downside.
Yeah. So, okay. So maybe so on that said, right, Nick, like I have noticed myself, and I'm interested to get your opinion on like just the market, the pre-IPO stock market seems to be getting bullish, right? So like there's bigger spreads, the fees are starting to expand a little bit. Like there's just this, I would say in the last 2 months, perhaps, right? I am noticing things run a little bit, right? Is that your observation as well? Or like, what are you seeing? What are you seeing?
Absolutely. I mean, you are well, it might be in part because of the names that we track. You know, a lot of the names that we are tracking are heavy on AI, heavy on technology. You know, we're not really doing a lot of brick and mortar type plays in what we're up to. But we've definitely seen that outperformance. And I think the year to date on the pre-IPO top 50 has outperformed the public market as well. So that was not the case coming into the end of last year or all of 2024. I'm pretty sure. You know, it was really the last 3 to 6 months that I've seen that pickup. And it's I think it'll be interesting to watch what Clint describes, because I was thinking of it as, you know, tariffs are equivalent to the softening on supply. But if it does dampen demand, this makes a lot more sense to justify further rate cuts. You know, and this is exactly the type of pressure that I feel the administration is going to want to do. You know, the whole Trump administration 4 to 8 years ago was like, oh, we got to cut it again. We got to keep pushing this thing down. So there's no reason why I wouldn't agree with Clint on a lot of that sentiment. But it will just be interesting that if it is net deflationary, which is not something that I'm totally in agreement with. I think there is going to be more of an inflationary impact than we're expecting, and maybe it's in part with China, but definitely in part with, I mean, going and buying eggs is now the new headline, right? Whatever's occurring in Canada, Mexico, everything local. If we do go insular too quickly, I think that'll definitely be inflationary.
Yeah. All right. So let's keep an eye out for that. I'm like this. Go ahead.
Here's a stat too. I wanted to reiterate. So this came from Apollo. Actually, they published it this morning, which I thought was it's timely for this conversation. But they said that Canada, China, and Mexico make up 43% of U.S. imports. So just as a place to look at in terms of how impactful this is.
Yeah.
Whether it becomes, to Nick's point, maybe more inflationary, or to my suggestion, maybe more demand destruction in the short run, it's problematic when you consider where our growth rate is, right? And you consider where our inflation rate is. We're in a sensitive time. If you think about growth, we're running at about 2% annualized real GDP at the current moment, and you start to think about 43% of U.S. imports. Being subject to these tariffs, it could have a profound impact.
Yeah, I just feel like this whole year is going to be like what we're seeing, right? I mean, you're seeing stuff out of Doge happening, right? Agencies are getting cut. Regulations are going to start. I can feel the regulation cuts are going to start coming. Now we're talking tariffs. This whole year, every month, there's going to be another thing, right? So my biggest concern is just when there's so much change happening, right? And everyone doesn't really quite know what's going to do. Like this is the thing with the tariffs. No one really knows what's going to happen.
No one
That's
knows.
the reality,
Yeah.
right? So when you're thinking about putting capital at risk, sometimes people are like, I don't know what's going to happen, so I'm just not going to do anything. Like, let me just sit this year out,
Well, see,
and then we'll revisit
pre-IPO.
next year.
I mean, think about pre-IPO. The wonderful thing about pre-IPO equities is that at the end of the day, once you make a decision on the fundamentals of the business or the general market trends, and you make that commitment, you're not flipping. This isn't a public market security where your behavior can really put you at a disadvantage. I think this is why I love private markets over public markets, is because at the end of the day, and I know Dr. Assens calls it volatility laundering, but at the end of the day, it's important. Volatility can sometimes make people make bad decisions. And so it's kind of like a help me help you by giving you this private investment. And so I think it's really bullish for the asset class in general because, look, I know we're about to talk about it, but AI is the arms race. Right. We're in an arms race. It's like the race to the moon back in, back during the JFK era and the Cold War of Russia. We're now in an arms race, and there's going to be trillions of dollars that flow into technological infrastructure and technology in general and AI. And a lot of the great investments in robotics, and a lot of the great investments are private. Right. And I think it's an exciting time to be in this asset class. And I like placing capital more in this asset class so that I don't have to, because you're like, hey, I position size appropriately. I make the allocation decision. After that, it's not like I can put a stop loss on it and flip it. Yeah, true. So I think it's beneficial long term.
Well, that's an interesting point because I think if you can find, there's definitely emerging trends in this pre-IPO stock asset class, like technology trends, right? So if you can get in the way of those emerging trends, I'm not sure if like there's tariffs or not tariffs, or if rates get cut or don't get cut. Like AI is probably still going to happen, right? Right. Robotics is probably still going to happen. So it might happen slower, perhaps, right? But to Clint's point, if you're in, you're in. So maybe it's not 5 years till an IPO. Maybe there's 7 or 8 years, right? But
you're playing the theme, so Clint's got a great podcast, the Fat Pitch, and he had me on there about a year ago. He's like, "Oh, what are you into? Like what are your investment themes?" And mine was just long duration, right? Because we don't want to be messing around. Oh, the market dropped because of DeepSeek yesterday, and so I sold all my NVIDIA, and then it popped back up, and I'm kicking myself. These are things that you have to think really long and hard about what you're going to allocate to. Right. And if it's the greatest example is one that we just think is ridiculous, or I did a few years ago, which is the humanoid robots. Right. But thematically, we're going to have to wait a decade for that thing to play out. Yep. So I'm not going to be looking at the news and changing up my position every 2 days. It's true. And oftentimes those become your better positions over a long period of time. Said. Because so I think very short term about these tariffs. Let's think long term about the investments we're taking and the fact that we get to play in the private markets, and most of these companies are pure play. It's really you get to know more about the management team. You get to know like very deep aspects about the product and the services that the company has and what the roadmap is, and then you're playing into that and you call it a day. Right. Yeah. So no, I think the private markets are a nice, I don't want to say safe, right, but it's I would say emotionally stable place to be investing as well. Yeah. I do like that aspect of it.
All right, let's hit on OpenAI. They had a whole bunch of releases, but Clint, you were mentioning just before we started the thing that you did some stuff with O3. Tell us about that experience.
Yeah, so O3 gets launched, and I start messing with it, and what I did was just start. At the end of the day, it's really great at coding. So back, if you remember the first instance, starting to, and I gave it a shout out this morning, but just Python code's almost perfection. I had to create a bunch of models, MACD model, a bunch of models for leading economic indicators, and just playing with it and have it correct code. It's insane. You can create pretty much anything with this thing. And then I started messing. Got me down a rabbit hole just philosophically over the weekend, thinking about what's the new economy going to look like. I think Aaron, you and I were sharing texts back and forth about and Andreessen talks about this, but the idea that everything goes to zero. Raoul Paul talks about this as well, that we end up in this environment where economies are completely different, communities are completely different, and I think for the better. And it's a experiment in utopian fantasy in some instances, but ultimately, when you start going down the rabbit hole of what happens, you come up with this creator economy. And I was reading an article about depression, and so it just triggered it. And a lot of depressions come when people just aren't creating enough. They're in dead ends. They're just like more task oriented. They don't spend a lot of time creating or thinking. And so I just had ChatGPT. I wrote kind of a little outline, and I said, hey, here's the outline of something I'm thinking. Write a 5,000 word, visionary expose on the creator economy. And I'm going to send it to you guys after. It was perfection.
Oh, really?
Perfection. It was unbelievable. It was like took everything I had outlined, all the main thought areas, and just created what I would have thought was a masterpiece before. So now I'm just thinking, like, if you think about how fast these iterations are, what we now have is a computer that can essentially translate thought. If we can come up with a way to give it prompts from thought, and it can create whatever we want from that thought. It brings thoughts to reality faster than we've ever had happen historically. And I think that is an amazing, not step in the right direction, exponential leap.
Right.
That I think is going to ultimately benefit society and humanity. So it's just incredible. And just to see how fast it's iterating and getting better, and the continuous improvements we witnessed since version 1 is just amazing.
Yeah. Okay. So Nick, respond to that. Like, what do you think about Clint? What just said also too? Like, have you used any of these new models yet from OpenAI, or any agents? Maybe I should say too.
I'm going to hit on the prompt engineering aspect of it, because this has been pretty big for us, right? So I just put a quick snippet on LinkedIn about we need a couple interns, and we want someone in New York. Okay. They need to be local. We need someone that has decent Python experience, like properly have coded in the past. And that's the one where we were coming up short with a couple of years ago, and it wasn't like that big of a deal. If someone had a pulse and an interest, in finance, that makes for a good intern.
Sure.
Now we can't look at those kids. Those students are not good enough for what we need. We need folks that can do Python and could do prompt engineering for all the reasons that Clint just mentioned. I mean, we're not going to write a 5,000 word expose on depression, but we need different tasks laid out. And if they're not able to code them up, then they're going to have to be able to appropriately articulate that into OpenAI, Anthropic, DeepSeek, whatever it might be, to spit out the code and then start to inform that. And I just think back to my experience. So I was an intern at Eaton Vance 20 years ago. What I was doing there, I was automating Bloomberg exports into Excel and using, was it QBasic or some Visual Basic back in the day. I'm like, it's the same problem. It's just the newest evolution of it.
Right.
And the amount of time that took me a month to do a lot of what I was building there. I bet I can crank that out, or the new version of me could crank that out in 2 days.
Yes.
Everything that I did that took a month can now be done in 2 days, which is exceptional. So not only is maybe the cost going to zero, but the time is going to zero.
Right.
So I think it's great. Yeah.
Listen, man, so I've seen some demos of Operator. I haven't pulled the trigger on the $200 a month thing yet for OpenAI, but now I'm like very much tempted now that this Operator thing's out. But like, I'm watching these guys do this stuff, and they're literally like opening up a browser and like showing it what to do, and then it like learns and like repeats the task. And the guy's like asking stuff like one of the guys, one of the guys like, I want to arbitrage Facebook Marketplace to eBay. So find me things that look like this on Facebook Marketplace, and then go and post them on eBay for a 10% markup. And it was like doing it just on its own. It did one, then it did another one, then it did another one, then it did another one. It was nuts, man. So I just think this year was like the year of the AI agent, right? Like everyone was kind of talking about, like last year, people were like, is this AI thing real? Everyone ended the year like, yes, it is. Now 2025 is like, all right, we got to implement this stuff, right, into people's businesses. I think stuff like this just makes it even easier to see it go through, right? When you get Operator and some other tools or solutions out there. I was thinking about maybe hiring somebody for the company, right? Like a research analyst. I don't think I have to do that now. Like, I was also watching My First Million, this podcast, My First Million, and they had this guy on, and he was talking about this company called Lily, right? Which is like Zapier, but for AI. So he was like, oh yeah, you just run in here and you set it up. It's like $20 a month, right? And it will like pull stuff out of your Gmail account, categorize it, and send you reports and summarize it. And it was incredible. And it linked to all these different applications that you would use like on your desktop, right? So I just think this stuff, like, you know, and they were having a whole discussion. They had like a 15-minute discussion about how they don't need assistants anymore because this company Lily, which is an app, I think it's an AI app, right? That's what I would call an AI app, is basically doing the assistant's job for them 24/7, doesn't sleep. They can do more things, right, with that assistant. So this is like,
so is that, let me ask, is that going to be an inbound, you know, I struggle sometimes with like using a very large company's website, and I have an issue because I have 2 accounts and the billing is set up incorrectly, blah, blah, blah. And you go through the help for the forums and you get nothing.
Yeah.
So I could hit that AI assistant at 2:30 in the morning and it will like, oh, let me help you with that. And we'll walk you through.
Well, he was
That's
also
a game
saying,
changer, right?
The guy with Operator was even saying, like, I'm planning a wedding and I need to get quotes for the caterer. And he was like, call 20 companies. And I guess he linked it to one of these like AI voice things.
Right.
The AI Operator called like 20 companies and got quotes.
Google or Apple did that in a demo years ago.
Uh-huh.
You know, it was go get me a restaurant reservation at these 5 restaurants in this order at 7:30, and it was like the first restaurant was full, the second restaurant they could take the booking at a different time, and then it booked the third or something. You know?
Yeah.
But now if you could do more advanced quoting, that's pretty awesome.
It's amazing. It called everybody. It got the response, put it in a spreadsheet. It was wild.
In B2B land, it's like, oh, how about we give you a demo? You're like, nah.
No. We're good. No, but listen, so this is the thing. So Y Combinator came out, right? Which is like a Silicon Valley, like venture capital shop. And they work with like, you know, pre-seed companies. Like, you know, the 3 of us get together and we like have nothing. We have like a PowerPoint presentation or maybe just a really crude demo. And they're like first check-in, right? Y Combinator. So they came out with their targets for 2025. Like, what do they want people? What are they looking to invest into? It was basically like, we want to replace humans in their jobs. Like, build something that replaces an accountant, not like part of an accountant, like the whole accountant. Like, no more staff accountants at this company. Like, this is what's happening now. So like, we've now gotten, what I'm seeing is we've gotten to a point where it's this like unabashed, we're taking out people. Like, make this tool, make this solution, you know, no more associate lawyers, gone. Don't need them for research. We got deep research, right? It'll go and do all the case law studies and everything, come back, give you a great report, you know?
So let's go full circle on some of the kind of talking points from the news as of late, from the new administration. We're concerned about the H-1B situation. We're concerned about immigration, about taking American jobs. Yet we are full bore on this.
Oh, for sure.
But it makes sense. You know, it makes perfect sense that this is the next evolution. It's the next printing press. It's the next
I just find
and
it. I still don't think, Nick. I mean, you tell me. Do you think people really see this coming? I don't think. Like, we live in this space, right? So I think we're kind of like inside track on what's going on because we like follow these companies for research purposes and everything else. But I don't know if if your average American fully appreciates that there's like computers that could do their job now, and it's just a function of time before someone like stitches the nuance of it together, right?
But it's not just any jobs. You're talking about white collar, high paying jobs.
Yes.
Like, I still believe this is the greatest deflationary force we've ever witnessed.
Right.
Ever.
Right. It's
long term.
Yeah.
And that's ultimately great for the individual.
Yeah. Well, Clint too. I mean, we talked about tariffs earlier. The other thing I kept thinking was like Trump sending out messages like, come and build your product here in the United States, manufacture here in the United States, and then you don't have to pay the tariff. And in the back of my head, I'm thinking like, that's where all these humanoid robots are going to come in and start making this stuff on the cheap. You know what I mean? And that's the path forward. So you don't have to make XYZ in China. You can make it right here in the United States using robots that work 24/7 and never sleep. And the factory runs all day long, every day. It's just, there's no benefits. There's no HR. It's all robots, right? So I just like some of this stuff. I think you're right, man. Like the world's in for a very big change. And I think these AI agents, this year, I'm just waiting for earnings reports and where companies are starting to like just unabashedly say, we had X amount of employees, now we have Y, and we're down 15%.
Right. And maybe they'll take some pages out of the Klarna playbook, right?
Yeah.
You're like, all right.
It's true.
I mean, even in government, we're looking for voluntary redundancies.
Right.
We got to do the same in the corporate landscape.
Yeah. But to Clint's point, there's going to be a lot of people that are trying to find creative things to do, right? So it's going to be amazing. It's going to be really interesting to see what people kind of find themselves up to. Because if an AI takes out a job, a white collar job, to Clint's point, and that job just like frankly doesn't exist, the human's not required to do that job anymore. I mean, like you got to go find something else to do with yourself, right? To make a living. So. Yeah, I mean, this is all going to come super fast, but maybe last question on this OpenAI thing. So if these AI agents start to play and guys are building apps, like what does that do for valuations of these companies? Like OpenAI is at $300 billion now. Is this a $1 trillion company? Can it be a $2 trillion company? Like what's the TAM? You're talking about taking out 10, 15% of the workforce. That's a huge TAM, right?
Well, yeah, yes and no, because I think you're going to have a rebalancing effect. You're going to have the idea of the next DeepSeek coming out and making it more competitive, right? Because you can't just exclusively use OpenAI and they take monopoly market share in my mind. The moment they get that big of a lead, you start to have players that are going to find ways to catch up. And that's why we have, and maybe it's like an oligopoly. You look at like cloud and compute and things of that nature, but it's never just going to be OpenAI. And actually the ease to switch between OpenAI and Anthropic or we're looking at, okay, should we be using DeepSeek or not, is actually not that bad. It'll be hard for a big corporate, but all the big corporates are using multiple cloud providers. So why wouldn't we have multiple LLMs and different approaches to how we structure those operators.
Yeah, I'm with you on that. I think an oligopoly type approach is probably how it will play out. So, all right, fellas. Well, let's end it there. Unless you guys have anything you want to hit on to wrap with, right? But those are two big ones. I'm super excited for AI agents.
We got to talk about
me too.
UBI at some point too.
Future. I mean, what's be cool? Maybe we'll do this next week. We'll get it going. I want to know where everyone thinks UBI is going to come, like gonna hit. Like what year is it?
Let's ask all the AI tools too. Let's ask.
That's actually a good idea. We could do that.
Let's ask XAI. Let's ask them all. Let's do that.
Yeah, like that to me, like, is it 2029? Is it 2030? Like I think it's coming fast. I think UBI is coming fast.
Hey,
Universal basic income.
we announced a sovereign wealth fund today. So
I know. Listen, man, everything's changing. Okay, everything's changing. Get ready. It's going to be just fast and furious for the next 2 years. I don't know if it's good or bad.
It's all good.
We'll find out.
It's always good. It's a perspective. Good, bad,
Embrace the change.
It's all good.
Embrace the change, right? All right.
Enjoy it.
I like it.
Yeah,
All
I
right,
like
fellas.
that.
I appreciate you guys.
All right.
All right,
See you
man.
guys.
See you guys. Cheers.